General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright. The work don't do itself. Which models hit? Which one missed? Let's get these profiles. It seems like TradingView update every week, because every week when I do this replay thing is here, and I know I take it off religiously. Like, oh, it did update this week, because I think they did something with the login. Where's that thing? Here we go. It's just tacky. You can form fit some stuff here, but you see us reacting off of previous week's low. I just want to see the profiles. Tuesday. Tuesday was nice. Control. It's not really a classic profile. Let's see what Wednesday. This is a New York reversal. CPI was crazy. profile. I think it's everybody's bread and butter. So the daily profile's kind of missed. The logic, the price is true. But New York got jumped on Thursday and Wednesday. Tuesday, Monday, and Friday was one-sided. It's 3 out of 2. You can't really complain. The profile week. Some more understanding context and DOL and holding through the high volatility. The progress. Staying engaged and curious. Power learning how the markets are priced. Case studies. Such a peculiar time. It's not applicable. I grinded before I posted for grinding. Experience earned this week. I don't know, chart time. I'm really hitting it. Nothing to think of. Yeah. Next week, improvement focus. And we waiting for this war. That's what we doing. We waiting for the markets. We look for what's going on. I do want to study more about the options market. Let's get these power of 3 charts. Yeah, that is crazy. That was the last low. We just go through it. This was the last low. It's like, we're going to watch this. We got below it. We didn't really use it at all. It's not really significant. The gap is this low staying open. It tried to hold off a bullish week. Yeah. This was the most textbook delivery, and it happened on Friday. So catching this is bravery, because this is not clean. Catching this, you would have got stopped out here. You would have felt good after it gapped down. Now you look like the man. But this is the most textbook entry of the week. After here, yeah, this could be the power of 3 chart. basis. That chop was nonsense. Inside of it probably was, really good scouting and stuff. It's easy to find. Well, I ain't gonna say easy. Say nothing's easy. First started off the week with the gap down to 200. Yeah, a lot of buy orders probably were triggered and they're about to get stopped out. That's what it's looking like. Price rally lost steam. What's interesting is it's not a fast sale. Like the sales are usually bigger. Key takeaway. Sales not explosive. The volatility is very high. Also, it was like this article where it was talking about like, like volatility dynamic hedging is like at an all-time high because everybody got like puts. Puts is out of control right now. And so it's kind of like they just stopping everybody out. People probably like seen this coming, and you got them expirations, and like, man, just hold it. It's gonna be some type of max pain thing. Just Google that, like Google SPY put call gamma hedging. You'd be like, man, there's a lot of it going on. Let's go in here. It's the accumulation, the manipulation. Hold on. Because we way gone over here. This is the whole month. Here. NFP week, nothing. Surprised we didn't take that week with neither one of these weeks. Week one is an anomaly. Like we need that week. Right now, this month is bearish. It's probably gonna be a nice little bearish month too, especially being March. Seasonality is so strong. So this should be the most bearish week of the month too. Because it's week 3. How many weeks is in this month? If we got 5, we probably get that manipulation. 3. Yeah, we got 5. This week 3, week 4. Nah, we don't. So we can do the wick this week. Next week we can do the expansion. Then week 4 we can do the wick. So the accumulation is here. This is definitely manipulation. Taking them out. Accumulated orders to 200 daily. SMA. Big retail load the point. No, load the boat level. Mm-hmm. We get this point here. Then end this point here. Ooh, wow. On Tuesday. Tuesday now. Week. Manipulation. To Friday's high. And price. That level to return back down. Took out those people who sold Friday. Dang, that's messed up. Well, it ain't messed up. It's the game, but that's a good sale. You had this sale here. You like, man, you cashed out, man. You start retracing. You like, man, it ain't finna take me out. You know, that is the game. Accumulation, manipulation, distribution, man. That's crazy. I don't know. Chart 3 should just be my spot chart. I'll figure that out. Can't do no chart 3 at the end of the week. But I do want a swing trade. No notes and thoughts. That's it for Saturday. All right, that's talking about y'all. Have a good day. Peace.